Hidden divergence is a really powerful tool in the Forex markets. It can show you underlying strength within a potential trend and offer you clear trading signals. It's similar to normal divergence, however, it's used more for trending opportunities. So stick around, you're going to want to watch this one. So we're checking out the hidden divergence trading strategy today. Now, there are two types of divergence in the markets. There's the classic and there's the hidden. Now, the classic is when we have price making sort of lower lows and the oscillator making higher lows. So there is a sort of difference within the price and the oscillator that you'll be using, and that often leads to opportunities in terms of reversals, whereas hidden divergence is used more for trending environments. So in this example here, you can see prices making higher lows and the oscillator makes a lower low. This can give opportunities to traders looking to catch another move within the trend. So an example of a bullish hidden divergence would be when price comes into this support level here. We can see that we consolidate around that area. Price then breaks and makes a new high. We then get a market move which then forms a higher high. So we can clearly see now that the market is starting to turn a little bit more bullish here. I've also added a 50 simple moving average onto the chart as well, because if price is above the 50 simple moving average, it can often lead to more bullish opportunities. If it's below it, it could be more bearish. But in this example here, it breaks above that 50 SMA. Now you can see price comes back and starts to rally again, and you'll notice from this higher low to this higher low, the oscillator actually shows a new lower low forming. This can give an opportunity to traders looking to try and capitalize on the trending environment that's forming in the market. And you can see price obviously rallies here. Again, we get another little bit of hidden divergence as well. Price makes a higher low here and also makes a lower low on the oscillator. Arguably, this one's a little bit better because it goes into what's known as that oversold territory, where the market has gone a little bit deeper. So that could be a really good opportunity to try and capitalize on the trend as well. Moving on then to the bearish hidden divergence. So the market is in a downward trend here. It's making new lower lows, lower highs, more importantly. And we can see here that the market forms a lower high. So we have that lower high here from this high as well. So the market is trending lower. We're below that 50 moving average as well. And we can see that price forms a higher high on the oscillator down through here. Okay, so the oscillator is making a higher high, the price is making a lower high. Again, we come into the highs here. This is what's known as the overbought territory here, and then the market continues to push lower. So this could be a good entry around this point. Stop losses above the swing high, targeting that previous area of support in the market. What I'm going to do now is show you how you can set this up on your MetaTrader 4 or MetaTrader 5 platform. So here I am, I'm on MetaTrader 5. In this example, I'm on a Euro US dollar hourly chart. This can work on all time frames. You don't have to make sure that it's just an hourly time frame, but just for this example, I'm set up on an hourly chart. I'm going to go to File, and you want to go over to Insert, Indicators, and you want to come down to oscillators. Now you can choose between a few variations of an oscillator. You can have the relative strength index or the RSI. I'm going to be using the stochastic oscillator in this example, so I'm going to go down to stochastic oscillator. My inputs for this are 1533. Okay, now obviously you can change the colors to match what you want it to match. I'll show it that it was similar to what I showed you before, so with a white line in here. Obviously we can change the thickness. I would suggest maybe changing the thickness just because it's easier to see. So here we go. This is the stochastic on the chart, and what you're going to be looking for is identifying the areas where price makes a higher low for this instance, because we are bullish. So I've actually got two moving averages on this chart. I've got a 50 MA, which is the red line, and this one is a 200 MA. Okay, so you can actually see I'm looking at the sort of longer time frame trend here. What I can also see as well, we've got a good example of bullish hidden divergence here, where price makes a higher low but the oscillator makes a lower low, and we go into that oversold territory. So what I would be necessarily looking for in this particular example is, if I just drop a line on the screen here, I'd be looking for entries as the price or the oscillator crosses back above that oversold condition. Okay, so around about this area here, you can see that the K is above the D as well, and that we are pushing back above that oversold condition. So essentially entries for me would be sort of in and around this area here. I wouldn't necessarily go live. I would be looking at a potential for the market to kind of continue higher. So I'd be looking for a long in and around here. Stop loss would be going below that sort of swing low essentially, and I'd be looking to try and target at least 1 to 1.5 to 1. So you're looking at like a 25 pip stop there, so 1 to 1 would have been hit quite easily. At that point you can bring your stop loss to break even, see if it runs up to the next level. I would be looking to target up at this area here around about 60 pips for this example. As you can see, price would have taken you out at break even. You would have had a 1 to 1 there, you would have halved your monetary value on the trade, and then you would have taken your stop loss to break even. So you would have come out with 0.5 on this potential position here, but this is just a quick example. I didn't even know that this one was necessarily there on the chart. So this one I'm just showing you here is a good example in line with trend. That's ultimately what you want to be looking for with this strategy. You want to always be in line with the trend here. So talking about conditions then, and just recapping the video as a whole, you want to be looking for hidden divergence in trending environments. So it's really important to identify a market that's trending first. You then want to be identifying price action as well. That helps you identify the trend. So look for the conditions in terms of higher highs, higher lows. You then want to be looking for key areas of support and resistance, and then apply the strategy. Okay, look for that hidden divergence within the trending environment. Hopefully that made sense. Hopefully you enjoyed this video. If you did and you're new, please hit that subscribe button and like the video. See you in the next one.